Hi there, Teresa Timms, president of TDR Mortgage and Real Estate Group in Upland, California, and you can find me on the web at the SoCalLoanPro.com. So let's get started. I'm going to cipher the difference between FHA, VA, and conventional home loans. Short, sweet, as you can go really detailed into each one of these loans. The first one is the VA home loan. It is available to veterans, active military, and their spouses only. It's a zero down home loan product with no monthly mortgage insurance, making this one of the top loans out there if you qualify. And again, it's a benefit if you've been in the military. The other loans that I want to kind of compare and contrast are the main loans that people do. FHA home loans and conventional home loans. Now, the big thing about FHA and conventional are the loan limits. FHA has loan limits specific to each county, and some counties are what's called high limit, and so the loan balance or the sales price that you can have access to is much higher. For example, this is 2020 in LA County, the loan limits, you can go up into the 800s, whereas in the Inland Empire, Riverside and San Bernardino County, you're going to be in the high 4s. So that's a pretty big difference. FHA home loans are 3.5% down. You can't put more down. They have monthly mortgage insurance no matter how much you put down. They also have a mortgage insurance premium that you pay up front. So, for example, on $100,000, it's 1.85 or 1.8, and this gets loaded onto the loan balance. So you would just add that onto the loan balance, minus out your down payment. FHA is great for people that are first entering the market, as they're much more generous on your debt ratios and your credit scores. So on conventional loans, they're much stricter on your debt ratio and your credit scores. And one of the things that's really neat to point out is that because conventional is so much more restrictive, with FHA, we can go up to like a 56.99 debt ratio. And conventional a lot of times restricts you around 44 to 47. That can sometimes give you $100,000 more buying power. So sometimes people that may want to go conventional wind up going FHA. FHA is a great program that is affordable for many, many people. And we do a lot of FHA loans. You can also layer FHA loans with first-time homebuyer programs. So conventional loans, going back to FHA, FHA really likes the space of around 640 and higher. You can purchase a home, an FHA, or you can purchase a home with FHA when you have lower credit scores. But what we do at TDR Mortgage is oftentimes, if you have a little bit lower credit score, it's really, really easy to get your score up. So oftentimes when you're in the process, we're working on your credit to get your scores up. Okay, so with conventional home loans, these loans are reserved for highly qualified people that have money in the bank. They have reserves. They're putting 5% or more down, although there are 3% home loan buyer program loans out there. Typically, it's 5% down or more. And when you hear about these really, really low rates, those are typically conventional home loans. With conventional home loans, you put more money down and your monthly mortgage insurance is less. Whereas with FHA, that's simply not the case. Conventional loans do not have any additional upfront mortgage insurance premium either. So typically when we have people that are looking to maximize their home purchase power in terms of getting into the best type of finance, it's conventional that we often put them in. So I hope that clarifies things for you. And if you have any other questions, feel free to call into the office, 909-920-3500, and you can text. Now, if you are finding me on YouTube and you haven't subscribed to my channel, be sure to do that down below and leave a comment. I would love to hear from you.